Alrighty here, Doc from North America. Good morning, good afternoon, and good evening. And sometimes the morning is really late. All right, let's see what we got going on here today. Let's jump over to that's the dollar index, the UUP. That's from yesterday. Let's see if we can get this thing to update right now. Let's see, it's set for that. All right, let's try this. Just for curious sake, nothing more than that, and then we'll jump right over to the Swiss franc. No, nothing yet. So let's jump to where we normally start nowadays, and that is there's a Swiss. You can see it's very firm in here. We have the Swiss on the, we have the cable right now on the J4X. Let's switch over to that right there. Notice the dollar is still firm. Still firm. Odd but true. I do see interest rates now going up a little bit, but it's so unique. Let's see. And we get the fact check spreadsheet up there, right there. Excellent. Can you see the numbers? Let's see if we can make that so you see the numbers. So I'm going to say like line this or line that. There it is. Like line 21 is the, let's see if we can get, oh, it's wrong place to highlight it. There it is right there. Line 21 is 10 weeks in a sell, 2 days in a buy on the what do you call it, the Swiss franc against the dollar. And obviously, you know, this is the third day now starting off into it, so that's kind of neat. And then what do we do? Go like that again, right there. So now let me go to the chat line and see what's going on there. Let's see, chat line. There we go. Heading over there now. There we are, loading that in. And come on, spill out. I gotta get through a commercial now. Let's see. Once that commercial's over with. There we go. Excellent. Excellent. There we go. I see nobody asking a question at the moment, so that's fine. I didn't miss anybody, so that's always good. that's always great. You know, one thing I don't want to do is miss a question. I love my questions. So, here we go. We watched this currency market. You know, we've looked at it in a couple different ways. Matter of fact, this one, you know, the dollar Swiss, we haven't really drawn a box in that. I mean, we've had those two channels. Where's that? Let me grab the right mouse here. We've had these two channels here that we've talked about for a long while. You know, right in here. I mean, I think we've watched that channel for like a year and a half now. But overall, it seems to be hugging the line. Another rectangle, just like all the other products, stuck in some type of little tiny triangle. Not triangle, I'm sorry, a rectangle. So, like when we go and look at the euro, right there. Oh, we don't rectangle that either. It's just hanging on one of our lines that we've watched for the last couple of years, which is really, you know, unique in its own way. It always blows my mind that I'm able to even pick up on those things. That's how excited I am normally. And then you can see right here, cable, same thing. We've got a rectangle here, or a trapezoid, depending on what you like to call them. And you can see it's trapped inside that. And then we go over into the Canadian. Same situation, trapped again. I know it's different colors and so forth, but you can see it's trapped in this box. It's like, what? Now you can see it's banging, hitting the top. But we've also noticed, we went into the weekly buy last week there. Let's make that the full Monty there. There we go. And you can see right there, you know, it's in the weekly buy there. And we've been in a daily buy. What's that? Line 20, right? Yeah. Line 20 on the fact check spreadsheet. Let's zip over to that. And you can see, you know, 1 week in a buy and 8 days in a buy. A lot of strength. Well, nah, that's the wrong way of saying it. A lot of just long, a long period of sideways up. I think that's the only way you can really describe this. It's not exactly like it's exploding. It's, you know, it's kind of inching its way. It's got like it's got that summer vacation look to it, you know, for some of us in the northern hemisphere, and then obviously those down in the southern hemisphere are getting ready for the winter. So, you know, it's got that malaise. It's not even a malaise. It's like a lazy sideways, you know, uncommittable. I think that's the best way to describe it, is uncommittable. And who could not be uncommittable in this crazy market? You actually need, you know, quantitative and technical, really solid technical work to try to even figure out what's going on. I mean, honestly, it's the sloppiest. We are at a period, you know, I've been saying over and over again, you know, we're in the quantitative ease era. You know, this is not, you know, I answered another ex-pro, not, I don't want to call them ex-pros, retired pros from, you know, they've been in the markets since like, you know, the 1950s, you know, and you're talking about 60, 70 years of experience. And they're always, you know, I was the kid. I always mention that on the webinars here. I was the kid back then. I was like, you know, young guy on a trading floor, you know, young 20s. You know, and these guys then were in their 40s, and some of them were in their 50s. You know, and so they're always like, what is this? You know, what's going on here? Why is it doing that? You know, why isn't it doing this? And so I'm always trying to answer them, and my answer is always the same as I was doing the webinar. It's quantitative easing era since 2008. Yeah, 1908. Since 2008, is it 2000? We're in the 2000s, right? Yeah, 2008. What we have is, we have the Federal Reserve now is the market. The central banks, choose your central bank. It's your market now in your country. You know, and that's what it really comes down to. Hey, 33, how you doing this morning? We're just looking at these rectangles and so forth this morning. It's a perfect example. It's becoming too loud a signal. You know, it's too loud an obvious expression at the moment. You can see it. Let's see, where's it at? So, I mean, you see it here. Yeah, they're just cruising along. That's all they are. They're not, you know, they're not going down. They're not going up. They're just going choppy, sideways, tight. You know, it's like that everywhere. I mean, we don't put a box at the euro right now, but the euro's been that way for 3.5, 4 weeks now. Same situation. You know, since back here in the what is that? That's May 7th. So it's like over a month now. It's got what it did is it parked itself on this line we've been watching for like a year and a half, and the same thing is going on with the Swiss. The Swiss now since I guess you could say since May 17th, maybe even further back when you really look at it, like right there, May 10th. You know, it's parked itself on this line and it's just kind of dingling around. What we used to say is testing the underside, testing the top side. You know, just stumbling around. What do I think about GBR index? Looks like it's going up low volume. You mean the FTSE 100? Let's take a look at that. I saved it. I kept that so we could look at that. I have it open already. See, I think it's this one here. And here we go. Let me get that. Not that right there. Let me just move it up on the top screen there. There we go. This is the ETF right there. Let's see if we can shrink so you can see this better. I guess that's good right there, yeah. And so, let's see, what is that? That is yesterday's close. Let's see if we can get today's opening going on. And I noticed also, it does seem like we are just really, you know, just becoming quieter and quieter. Let's see, pre-market right there. Let's see if we can get this thing to pop open here. I think that's, yeah, what is that? That's the 14th. Let's give it a refresh. A reload right there. No, they're not updating it yet. So it's not updating, but it is plus. I know I've seen it on the tape and so forth, you know, and the news. It is plus. So I would imagine, well, first of all, You know, every time we get into a buy mode in any product in England, I'm pretty bullish on it because I really think that the whole island is undervalued. And so that to start off was always is always my opinion. Um, and then and the reason why, and I always go through this litany about the Commonwealth and so forth, but what they've done is they've just picked up 2 billion customers versus 400 million customers when they left Brexit, left the European Union. So that right there alone makes me bullish on it. And I go on the litany of, well, if everybody's excited about 1 billion Chinese, then if you like that and everybody likes that, then you gotta love the Commonwealth. It's got 2 billion. So I mean, what's greater, 1 billion or 2 billion? So, obviously 2 billion. As we take a sip of our water here, there we go. So, my opinion always is on almost anything in with the British, the GBP, is that it's undervalued, and when we look at the currency, let's go to the currency. Let's move this back down again, and when we go to the currency right there, now it's building a base and hanging out around the 1.40. We keep on thinking now, every time we get into, like you can see the last 3 days, we're in a, let's change that color. It seems a little too dark. I'm going to like that. There we go. And then let's fix that to be the same way, like so. There we are. I think that's much clearer. And so you can see it's playing with the bottom end of the range. You see the Bollinger Bands. Matter of fact, yesterday we made my time manifolds on the gas line 3 the same colors as we look at in the Bollinger Bands. And see, let's do this. Let's widen those a little bit style-wise. So let's make that just a little bit thickerish there. We can kill that and make that a little bit thickerish there. And then we can kill that, and then we can put down the middle, we can make that a yellow line so you can see that. And so there's the Bollinger Band. And what this is basically, the Bollinger Bands are a 1% standard deviation, and people play with the combinations. And then you can see here, this is our doing a 1 standard deviation of a moving average of our mathematics, our formula itself, and you can see, the characteristic, how it, it starts to take off here, and then, it goes into a daily buy, and then you see Bollinger Band finally turns. You can see, matter of fact, the white line, in many ways, is even more sensitive. You see where it takes off here, and then you can see you get the explosion in price, and then the Bollinger Band lifts right there. Can you see that? No, you can't see that. I'm using the wrong mouse. So here we go. So you can see here, this is, I've made it the same color for the fun of it, because we were talking about that yesterday, and that's what we use as an example there. And you can see here the blue of our time manifold on the plus side versus our red of the time manifold on the minus side. And then you can see the obviously the yellow line there is the moving average is the divide line. For us, it's the 0 line here itself. And so when it drops underneath and so forth. But the white line itself, you can see here, it took off right here, and then you can see the Bollinger Bands start to turn up. And then we topped out, and you can see it fights its way down. Even with the Bollinger Band rising, it's challenging the yellow line. See, our math turned it down before that. So just to, why, what do they call that? For your information. So FYI, I think they call that. So you can see how our mathematics moves ahead of the Bollinger Band. Our math moves ahead of everything. I used to play a game all the time, trying to go through, every public, from Tom DeMark to anything you could find, to see if anybody was beating me. This way I thought, okay, then I can use some of that to help me. But in the end result, my math is ahead of everybody, and I don't have an opportunity. So then we went to J4X here, and we found a way of trying to emulate it, copy it on a much slower scale, but at least it's something better than looking at some of these other public indicators. We took 2 what was considered lagging indicators, stochastics, a fast and a slow, put it together, and notice it does a really good job of matching up with my white lines. You know, it's only like about 3 to 4 hours behind. And then with the dots, my flowing dots, the red and green dots, I've made them hinky-ashy, which is an interesting combination of open, high, low, and close squared or something like that, and then averaged. And so, you know, I don't do that with my red and green dots, but for some reason it's very close to it, which is really fascinating. And the hinky-ashy is usually 4 to 6 hours behind, but at least if you're looking on a daily chart, it will give you a good general idea of where I'm at. I mean, it doesn't match perfectly, but it does a pretty decent job. I mean, compared to having nothing. I mean, obviously you'd love to have Doc's work all 24/7, but obviously if you don't have Doc's work 24/7, these two tools, or I guess you could say these three tools, and then we leave this, what do you call this thing here, the MACD, which is supposedly a leading indicator, and you can see it lags all this stuff right here. So obviously the market technicians associations across the planet have their categories all confused, because MACD is definitely a lagging indicator. But anyway, that's how we do that with the J4X. And so we give you a good way of building your own tools, and then you can always tune in the morning here at Dukascopy, see my work, you know, and then see you know, how good this work is at the same time, this combination of stuff. So, all right, where are we at? Oh, we were talking about GBP and picking up an extra billion customers, 1.5 billion, so that's pretty cool. All right, now let's take a look at the euro. You know, we have talked about all of these in the last few minutes, you know, because of the way they're hanging on particular target areas and doing nothing at the same time. And again, the euro doing its best to just slide a little bit. At the moment, you can see it went into that weekly sell last week there. That was Friday, and then obviously, you know, it confirmed it, but all week long it had been underneath the sell number, or most of the week. And then what happened was, you can see here, it tries, you know, to go down. It's looking sloppier. Oh, check this out. Look at copper. Oh, it's even sinking more now. Is that copper? Yeah, copper. Look at copper. You know, we went into that daily sell right there. We've been in the weekly sell from here, and it's been kind of nowhere, you know, just kind of hanging out. Let's give it a refresh. And this morning, it's the winner chicken dinner. You know, it put you into a daily sell here on Friday. Then Monday, you know, it made a little money. You could probably taken some of it off, and you were like, okay, I'm going to put a stop up here now and protect my gains. And then this morning, they give you a, you know, depending on how much you're trading, you know, they give you a beaucoup win. That's means a lot in Vietnamese. Beaucoup. It gives you a big win there. You know, so. You know, it's interesting. They're smackadoodling that, and this is what the July contract. So it's not like it. I guess there's a delivery thing going on. Maybe they have too much inventory. I don't know. I mean, it's not like I trust the high open highs and lows anymore, since the clearinghouses seem to change them every so often. But look at that. When's the last time we've seen a smackadoodle like that? I guess right there. And then they came back by the end of the day, and that was back in, was that March 4th? So, we don't see big moves like that. So that's interesting. You know, look at that, all the way back until like October and September. There's one there, mid-September, early September, the 10th. They did a smackadoodle there, and look at the next day. What a gap up. I mean, just when you thought it was safe to go into the water, you know. Luckily, if you're following Doc's work, we were in a weekly buy, so you couldn't, you got that sell, you were in the sell, and you try to take the sell, but you can't because we're in the weekly buy here, because look at the weekly right there. It's pretty much up all week long, and you're like biting at the, you know, you're like chewing on it. You want to get short. I mean, look at this, crash city, right? And then the next day, it's like, oh, zoom, right up, explosive. And goes like, oh, thank you, Doc. Your math really saved us on that one, or we would have gotten our little tootsies hurt. So that's always the fun part about watching the math, and it's a nice reason to, makes me happy besides my adverse unhappiness with the fake news anymore, um, you know, only I seem to talk about the quantitative easing as the main theme of the marketplace. And you can't believe how hard that is to get through the head of people who've been trading for 50 and 60 years. They're just like, what? What do you mean the Federal Reserve's doing all this? It's like, yes, you know, get away from your private nurse and pay attention to what I'm saying. It's the Federal Reserve or the central banks across the planet who are literally making the markets their buyer last resort. They go, well, what about the New York Stock Exchange? Who can stop the New York Stock Exchange? It's like they don't exist anymore. Oh, yeah, I hear it's slow, but it's not slow. It's dead. It's gone. It's owned by ICE. So, not only do I have to, I'm not liked by the U.S. media, but then I've got a bunch of old geriatric traders who've been trading all their lives, members of exchanges and chairmans and so forth, and they're like, what do you mean? It's like, guess what? The world is a QE world. Okay, where are we at now? Let's jump over back to the currency. I just thought the copper was fascinating. Let's see, we've done the euro. Oh, let's take a look at what I understand that Biden was goofing off with President Aragon. God knows what the two of them talk about. Aragon should run circles around Biden, that's for sure. I mean, honestly, Biden is such a lightweight. I would love they should do a pay-per-view so we could watch Biden and Putin have their meeting. But you know what? They're not even doing a news conference afterwards. It's the first time an American president will be doing a summit with a foreign leader, and at the same time not having a news conference afterwards. That's because yesterday he accidentally went nutso. Math is spot on, mate. Cheers. I appreciate it. It makes it easier to do a webinar and have a fact check spreadsheet up on the screen when you have such good math. I can say that much. To most, it sounds like an arrogance, but it's just a fact. I mean, it's right there. You see it. I mean, this is live. What started me on Dukascopy a long time ago was this guy who was trying to sell a service. I'm just out there I was doing Top Step. I was happy to just be able to talk about the markets in real terms, because, no one wanted to really talk about quantitative easing. Matter of fact, it was really hard for a lot of people to understand that the Federal Reserve was even involved in day-to-day trading. I mean, we used to say that people that said that wore tinfoil on their heads. So anyway, I end up on Dukascopy, and there's this guy comes on, and he's trying to sell a service more than he is trying to give us technical tools. So I'm watching it. He's right before me. So I'm kind of watching him. I got him on the screen. And I noticed that he's using different numbers and delayed charts, right? So what I mean by different numbers, he's using delayed charts. And I think it was Gitta at the time. Gitta was giving him a lot of grief. Like, no, stop advertising. Just do your webinar, right? So people would ask him questions, and he was putting up fake charts. Because the charts, he would, the chart would be like 6 hours old. It would be like 12 hours old. And he would be claiming that he can't give you live charts because he charges for live charts, right? And what he was doing is he would go and change the indicator to a chart and make it match like it was a really good, successful trading chart, right? And so it'd be like, wait a minute, your daily chart is like 12 hours old. He says, yes, that's because I sell it and I can't. And I said, I said, can you show us something live? And it would be like days would go by, and he would still be playing this game, and a week or two would be going by, and Gitta, who was in charge of Dukascopy at that time, for the webinars, be like, you're not allowed to advertise. Just do the webinar. and he would be like, still trying to advertise his stuff. But the problem is that it was delayed, and so he was adjusting the indicators to match up to a successful chart, And so I'm like, this is not right. You can't do this. This is wrong. So I chased him away, I guess, because no one would talk to him anymore, and I would just be constantly saying, your chart is 12 hours old, and then I would go back and look at the past ones, and you could tell that, like, he would change like to a 9 average, and then it would be like a 6 average, and then it would be like a 7 average. So you knew that he was changing the inputs so that the chart would look like a winner. So, here I am years later. I'm live. Matter of fact, at that time, I used to take the camera and I used to leave a 333 tick chart live of like the euro. And so you were watching my math not only daily live and weekly live, but you were watching it intraday live. I used to do all that, just to show that the math, works well. Now, I'd made a lot of money from the math, years ago. And so to me, I wasn't trying to build a service. I was angry at the fake news, and no one wants to hear what I have to say about it here in the States. They just don't. They're not interested. Matter of fact, you turn on Bloomberg or CNBC, the only ones that talk about it a little bit is the Fox Business News, not the Fox News, but the Fox Business News channel. We'll talk about the quantitative easing and the central banks. But overall, nobody wants to talk about this stuff. Not the Wall Street Journal, none of them. They don't talk about it, which is really bad because, it's hiding the fact of what makes the markets move. Now, our math does a really good job of spotting that. But most of my webinar, just because you're seeing fantastic math, is not my objective. My objective is to actually tell the truth of what's going on out there. And that's the problem, is that a lot of people don't know that the central banks are in there every day adjusting the markets to where they think politically they want them to be, which is really freaky, It's a freaky thing. I've said this many a time when we talk about the price of gold. I mean, if you would tell me what's going on today in 2007, a year before quantitative easing started, and then said, Doc, where do you think gold would be if they were doing all the things that they are doing today in the last, 8, 9, 10, 12 years, I would say, oh, well, I would imagine if things were that crazy, I would say gold has to be between $5,000 and $10,000 an ounce. That would make sense to me, because of what's going on, geopolitically, geoeconomically. It's more like geoeconomically, politically, combination of things, with central banks and the Federal Reserve controlling literally everything. The New York Stock Exchange gone. The NASDAQ now is the main exchange, and they were never anything like the New York Stock Exchange to begin with, because they didn't have the same power to control the price of stocks as the New York Stock. The New York Stock Exchange had enormous power to control the price of stocks. They had a really powerful opportunity all the time to change them during the day and weeks and months, the trends, and they blended in with the fundamentals of earnings and profit and loss and so forth. But they had an enormous power of controlling the marketplace. And so now that's all gone, and it's the central banks and the Federal Reserve that do it. And to most people, when they hear that, they say, that's crazy talk. That's crazy. You're crazy. Take that tinfoil off your head. But anyway, that's where we're at. So thank you for the compliment about the math. And now you know the backstory of why I ended up here, is that no one wants to hear about the central banks and the Federal Reserve and all that running the market, the world market. All right. So anyway, Biden was with Aragon yesterday, and what happened was that they're putting it into a daily buy today, and you can see the weekly buys jumped right back after that little quick weekly sell. So maybe again they'll go after our little yellow dots there, Oh, you can't see that. There it is. So maybe that's what we're going to see now is, this stuff is lifting up. That's heading there. Now let's take a quick look at it through the euro also. This is the euro Turkish lira right there. and I'm sure it's looking very strong. Look at that. That's like a bloody spike. Look at that thing. Oh my God. Let's contract this down for a second. Just to show you how sharp that move has started off. Look at that. Oh, it took 2 days. Look at that. For a minute, I really thought it was almost like this. You know, just bang, right up. But look at it. It was a little curve and then zoomed to the moon, Alice. And same thing's going on, sliding right back into the weekly buy. We're getting a volatility signal as we see right there. So it's even giving you a warning that, warning, Will Robinson, do. You know, it's really getting ready to maybe make some type of launch. Let's see what we got here. Alan says, yo, Doc, Goldman Sachs is the market with their 6 monopoly friends who run the exchanges. The exchanges don't really exist anymore. And Goldman Sachs is a bank now. They used to be more powerful. You know, especially what happened was, I guess it was Spear Leads bought up all the specialist units on the New York floor, and then Goldman Sachs bought Spear Leads, and then they made a nice windfall when the ICE bought the New York Stock Exchange. That's how that whole combination. I used to, what was it, the Kellogg, Spear Leads Kellogg invited me to commute with them. They used to commute to work by boat. And they used to sail in a motor sail to the New York Stock, to the port right where the NYMEX is now. Because they have a marina right there, and then you walk, about 5 blocks, 6 blocks, something like that, and you end up at the New York Stock Exchange. So you dodge all the traffic in Manhattan, and and you're not taking a train or anything like that. The guys used to sail in every morning. So Kellogg, he was a nice guy. He was a much older. God, I wonder if he's still alive. Kellogg, he was a pretty old guy at the time. But anyway, yeah. So Goldman, they're a bank. They were forced to become a bank. So they're a bank and a brokerage house, I guess. Because there's no Glass-Steagall anymore. So anyway, let's see where we're at here. So yeah, Goldman, they're just kind of like stumbling along now. They are nowhere near the trading house they used to be. They used to be fantastically a great insider trader at one time. I mean, big time. Let's see, where are we at here? Oh yeah, so this is it. This is the Turkish lira, and it looks like it wants to jump up. Now we'll take a look at Canadian again, as we did a little while ago. You can see it's playing with the upper end of the range, and we talked about how it went into the weekly buy last week right there, and it's been in the daily buy since there, and so forth. What is that chart? Euro, the euro? Here, let's go back to it. Right here. Now you can ask your question again. What's the question there? What is that chart? The euro dollar. The euro dollar is the dollar against the European unit. Remember, the euro is not, it's called the European unit because we already have a contract in the United States called the euro dollar. They've been trading that since the 70s, 60s, whatever. They traded it as an over-the-counter market for a long time, since World War II. I think it was created right after World War II. What it was dollars outside the United States, okay? And the cost to wire them back to the States, the cost of translating them back into dollars in the States here. So they were dollars that were sitting in dollars, but not domestically. They were outside the States. Matter of fact, there's a yen dollar too, but it was I think it was labeled something different. It might have been the yen dollar, but here in the States, there's a euro yen. So or globally, there's a euro yen. No, I mean dollar yen, and so, but what they are is they're an interest rate product, and they trade incredible amounts of them even to this day. They're like the most liquid. If Robin's around, I traded in the pit once in a while just because of the amount of volume it was in there. But I think Robin floor broked it too. He used to fill orders in it. Let's see, Doc, can we look at the NAS yen? Oh, most definitely. Let's take a look at the NAS yen. Let's see, NAS yen. It's down here somewhere. I know we look at it every so often. I think we might flip it around every so often too. Let's see, there's the GBP yen. Let's see. Nope, we don't have it there. So let's make one. Let's turn something into it. There's a euro yen. There's a euro GBP. Euro turn. Okay. Now why is there a second Aussie dollar down at the bottom? Right. So we got two of those, don't we? There's another. Let's turn that Aussie dollar at the bottom into the New Zealand yen, and we'll all look at it, watch it evolve here. Okay, so there we go. There, instrument, NZD. There it is, right there. And then let's do that on the weekly. There we go. Now let's give it a refresh, like so. Widen it out, like so. Okay, so in this case here, it's been in a weekly buy. What did it do right there? Did it go in a weekly sell? Yeah, it went into the weekly sell right there by the hair of its chinny chin after all those weeks in a buy. Right there. It stayed in the sell, what, for 2 weeks, and now it went back into the buy. Let's scrunch this up and steal some of the others so I don't have to invent them. So then we got this. Oh, this thing. So then it went into the weekly buy there, and then now it's flirting with, it's in the weekly sell last week, and then this thing went into the weekly buy way back here. Look at that. Let's see, is that right there? Yeah, no, a week before that. So it went into the weekly buy there. I guess we can erase some of these. Just remove that, remove that, remove that. Remember that was part of the Aussie there. We can move. We can get rid of that too, I guess. Yeah, let's get rid of that. There we are. And so that's what it looks like over since October. Went into the weekly buy at this bottom, and then just rode it. Oh, we can get rid of that too, can't we? Let's remove that. And so it's went into the weekly buy right at the end of October, and it went up from the high 60s, I guess it is, all the way up to before it went to a weekly sell. It was where's that? That's April. So it was in a weekly buy from late October all the way to April, 6 months. Had a nice run too. What did it do? It went to 78, 79, something like that. And then we can fix the dailies now to match up. Is that cool or what? Is that good math or what? Is that really neat? You know, it's not hard to do a webinar when you have math like this. And then, let's see, what do we got here? There's your daily buy right there. And it goes into a daily sell right there. And then it goes right back into a daily buy right there. And then it catches the weekly buy. Look at that, match up perfect on that one. There's a winner chicken dinner. Then you get a, is that the sell right there? Let's just double check that. Yeah, that's the sell. So it goes into the sell off of this one. And 2 days later, another big winner chicken dinner. Then a buy there. But see, you can't take the short because we're in a weekly buy right here. So, you know, you just watch it fall down without you losing your money. And then it goes into another one, and another winner chicken dinner. This thing trades nice. And then it gives you a sell there, and again you watch it fall. And then it goes right back into the buy 2 days later. Now no winner chicken dinner. That one you barely get out with your life. You give up a few dollars that you made over here, and then it goes into the sell again right there. Again, you can't take the short because of all this stuff. And then it makes all the money you lost, and then by tenfold. It explodes for 4 days to the moon. Then you got to sell here. Where's that? Right there. And you watch it fall down. It go boom. And then what do? We get a buy. Where is it? No buy. Is that a buy? That's a buy. So it puts you into a buy there, but you're probably looking at it, and I'm probably saying to you on the webinars, like, it's below the weekly sell number. Just wait a day or two before you get involved. Don't have a position. Then the next day, you know, it goes short, and you go, Doc, can't we get short? Then I'm saying stuff like, yeah, do it in binaries or options or something like that, you know, or like very tight leash on it, you know. And then it goes into the sell, closes on the sell last week right here, and it has not been very nice to anybody, but it still keeps on going down to the lows like it did there. And today it's trying to do it again. And so that's where we are at the moment here. One thing's for sure, you're not going to get long off of that. Alrighty. So 47, is that a good, that's a good analysis of it? How's that look? Was that pretty cool or what? Hey, no problem, 47. Anytime. Hell, if you want to ask something else about it, we'll go look and see what we all can discover. Remember, this is a trading pit. This is the cyber trading pit. You know, there are no stupid questions in trading. There are only long answers or short answers, and that happened to turn into a long answer, that's all. All right, let's see, where are we at now? Anybody care to see anything else? Doc is always willing to look and see. See what Mr. and Mrs. Rubel's doing. It's still gliding down. It's in that daily sell, basically, from this zone here. And somehow or another, I put it into a buy on the fact check spreadsheet off of this. And then the next day, I threw it back into the sell, and I have not fixed that. I just left it as it is. So you got like 9 whole days now on the downside, and you can see it's been in the weekly sell since right up in here. So that ruble's doing a fine job. I am, the way I am with the British pound, I am with the ruble. I keep on thinking the ruble's way undervalued. I really do think that the ruble should be like, 47 or 49 or, the mid 50s or something like that. I really do. They got a large workforce, educated workforce. They have incredible amounts of minerals and, products that they can use to manufacture. I mean, they've got oil. They're one of the largest oil producers in the world. The Russian Federation, it looks very solid in many different ways as far as I'm concerned. So I'm always surprised. Let's see, what does Alan say? Oh, thanks. No problem. What's that, about the Goldman Sachs? Yeah, made me think of Kellogg. Was it Spirit? Yeah, Kellogg. I hadn't thought about Kellogg. I can still see him. He always sat in this big, giant desk. It was like, his office was catty corner to Wall Street on Broadway. And it overlooked like where the World Trade Center was. I used to like to sit up there when they had parades. It was always a nice spot. They were like on the, I want to say they were like on the 5th or 7th floor or something like that. I don't know. It was a small building. Boy, did they have a nice pizza place down below. Oh my God. I think I gained, no, not there. When I moved to Chicago, that's when I gained weight. New York wasn't as bad, but Chicago was really bad. All those home breweries back in the 80s and the Wiener Schnitzel and the sausages, and oh my God, I gained 2 inches on my waist. Yeah, good old days. Good old Kellogg, yeah. I can still see him. He was kind of like out there. It kind of reminded me of, he was like Steve Forbes. You ever watch Steve Forbes on the financial channels? In many ways, he was a lot like Steve Forbes. I remember when they invited me to commute by boat. I was like, oh, this is unique. That was something. All right. What's this Kellogg setup? And no, not the cereal. It was Spear leads Kellogg. I think Spear was dead. Spear leads. I forget. Leeds or Spear was gone. They were old men at that point. It was an old shop, That was one of the golden classics. Spear leads Kellogg was much more prestigious back in those days than probably Goldman. Goldman was kind of like a black box, I mean, nobody liked. Anytime you shook a hand of somebody that worked at Goldman, you had to count your fingers afterwards, make sure you still had them. Oh yeah. No, this was. I don't know if he was involved in that or not. He was an exotic character. I know that he had no idea what the hell I was doing, and that's what always had him fascinated. That really had him fascinated. They would they would pull me into their surveillance part of the operation. They were like, "Can you explain this position?" I was like, "Sure. What's up?" They were my clearinghouse. They'd be like, "What's going on here? You got like $20 million going in one direction. You got like $25 million going in another direction. We're confused by that whole thing. Our risk guy is like, he says they're not a risk, but they've got exposure, but they're not a risk. I mean, that used to mess with his head all the time. They were like, what in the hell kind of position is that? And it was all options and stuff like that, so, and underlining. I'll have to look that up. Kellogg went into encryption. Let's see. Was he with Turning? Let's check that out. That sounds fascinating. Paste. Email encryption information technology, Northwestern. Let's see. Worldwide Web encryption, Kellogg School. Oh, I see. Kellogg the school. Yeah, let's see if I can find something. Let's see what Google says about Spear Leads Kellogg. Let's see. Spear. This must be like a ghost story. Yeah, it's like a ghost story, isn't it? Doc's on a ramble of a ghost story. Let's see, and Kellogg. There we go. Oh, there you go, too. Look at that. Okay. Encyclopedia.com. It does say that Spear Leads was consumed by, there it is, yeah. That was the alleyway, I thought. The 30 Hudson. It was the catty corner. Spear Leads Kellogg. Now, yeah, see it says there now, wholly owned subsidiary of Goldman Sachs. Founded in 1931 as Spear Leads and Company. Let's see, subsidiary of the Goldman Sachs, Spear Leads Kellogg, SLK, good old SLK, is a Jersey-based company that offers execution and clearing. Oh, they're still doing some of that too, okay. Long been a leading specialist in the New York Stock Exchange, such firms have been the heart of the system since 1792, when open auction approach. Yeah, that's, okay. That's kind of cool. Let's see. There we go. Yeah, you guys are letting me reminisce. I always like reminiscing. I kind of forget those days. They were fun days. Oh, okay. You know, Kellogg was a very exotic guy. And I kind of doubt it's the same one. I mean, like, you know, like Leon Levy. There's the Leon Levy seat at the Institute of Advanced Study and so forth. But I don't know. Leon was sharp, but I don't think he was that sharp. And I think Kellogg, you know, like there's one guy out there now that no one talks about. That's Jimmy Simons. Jimmy Simons started the Renaissance Fund. Magellan, I guess it is. And he was a code breaker in Princeton. And he also has a good mathematical formula in what is it? That gets drawn into string theory nowadays. A lot of string theorists use his formula. He's still alive. And they call him Chain Smoking Jimmy. But let me see if I can find him. This is a good one. He's got the cafeteria at the Institute of Advanced Studies in Princeton named after him. He donates money there. Let's see. Simons, that's it. James M. Simons, there it is. This is the... No, that's not it. That's a hedge fund. This is the biggest and best hedge fund in the world. And it exists right now. There it is. There we go. There's Jimmy. Jim Simons. An American mathematician, billionaire hedge fund manager. Renaissance Technologies. Right there. And they're the #1 hedge fund in the world. And most people probably don't even know about them. Let's see, U.S. retail down, inflation up that. Oh, the numbers came out? No. Oh, is that what you think is going to happen today? What are they doing to the stock market right in the stock market right now? But there's the number one. He was a code breaker for sure. I know. So you must have seen Simon's work on some level. Let's see. Where's it at? Let's see. Let's see. Oh, I know what I want to do. I want to find the stock markets. What's the stock market doing right now? Is that it? Or is that it? That's it right there. Is that it? No, that's not it. Okay, this is it. There we go. There we go. Okay. Right there. As you can see here, here's live. Okay, this is back in the old days. I would. Oh, look. Okay, they're knocking the market down a little bit, and this is a 196 contract bar. So this is really. Here, I'll show you. This is really live, extremely live. Let's see if we can do this. So you can see there. This is the NASDAQ 100, or what they call the Tech 100 in Dukascopy. Let's see. I keep on getting a message that there's a spy satellite getting launched in an hour and 12 minutes. It's going to be visible from where I live. Let's see. Retail down, inflation up. Numbers are out. Oh, the numbers are out already? Is that what it is? Okay. Yeah, you can see here. I guess what. Here's the S&P 500. Let's minimize that again there. And there's the S&P 500. So they knocked that down, about 20 minutes ago, right there. This is a 693 contract tick chart. You see when everything goes into the plus right here, you see how it goes up in value, and now it's trying to fall down, but it hasn't gone minus yet. When it goes minus, in this case here, it was nothing. It was just one bar down, and it started to find its way back up again. See here, strength, weakness, our math. You get a little choppiness there. Okay. So what happened? What were the numbers? Down inflation. Let's see. So U.S. retail down, inflation up. That's the information. Yeah. See. I think we talked about this yesterday. I think there's a strong feeling that they're gonna give this inflation situation something like another 6 weeks. Before they get panicky. There's a lot of funds are like saying, okay, well, we may lighten up something, but we're not selling, we're not hedging, and that's what's going on right now. And then what will happen is, if we see inflation going into August, at the end of August, or the middle of August, they're going to slam the daylights out of the market and the world markets. And remember, a lot of major tops, like the top of 1987 or, 86, no, 87, was it 88? That was a top, same time of the year. What was it? There was a 2008 or 2009 was the same way again going into August, September. It does that. It seems to be the target zone. It's like, I don't know, it just seems to fit into that. Taper is the word of the week. If it is, they're going to get a little nervous, that's for sure. I'm taking a sip of water, but what I understand is that there's a lot of funds that would just like the Federal Reserve to say, we're starting to consider our timetable about tapering. What is the exact timetable, and we're working on that, or we have an idea this, and we're going to communicate it on some level. They just want somebody to say the word. That's all they want. They don't even want to. They're not even asking for them to do it. They just want them to say it, say something about it. Because they're really, and Yellen's running around doing like crazy stuff. I mean, here we have I don't know, the last time we've had an ex-Federal Reserve chair that's now the Secretary of Treasury. That's really weird. I mean, that's really strange in so many different ways. I don't even know how to say how many different ways it's strange. It is strange. So, let's see, what else we got going on here, traders? I guess that's about it. We're at the end of the road here. We're going to get involved in other things at this point in time. But if you have any other charts or anything you want to see, fire them out right now, because I will you know, take a quick look at them, and then if not, I'll start singing. It's up to you. Me sing or another chart. That should be a no-brainer. Chart. I mean, I'm told I have a good voice, but you know. Anyway, let's see, where else are we? I guess that's about it. And so you can see here, this is the action. Look at it, you know, it's kind of built a base in here over the last 20 minutes, but it's quiet. It is quiet. Let's see with the Tech 100. The Tech 100 has been on such fire for so long. You know, you can see there, same situation. It's only down like 6 or 7. When we first started looking at it, when it was here, it was down 12 or 13 or something like that. So, and you can see they're trying to buy it. The thing went into the plus side right here, and so they're trying to buy the thing. So, US 30. Yeah, I just switched over to the September contract. Let's check that out. Let's see. Let's move that down, and let's go over to there. Let's see. Where's it at? Right there. There it is. Right there. There's the 30-year bond. You can see it right there. They are. It's kind of dipping down. We came in this morning. It's trying to push down. It's been in a weekly for a few weeks, and you can see here it's trying to take out the lows. We'll see. Looks like a plateau more than anything else. Just a quick. I mean, you got to remember the Federal Reserve can step up and just lift it up and down as much as they want. They control it. Here's the note. See what the note looks like. Note looking the same way. You know, not as much though. The 10-year. You can see that right there. So, all right, traders. Happy trails to you until we meet again, which will be Happy to Hump Day Wednesday. Happy trails to you, to all my cyber trading friends. All right, guys, gals. Aloha.